Hello and welcome. You're watching Business Today Television. I'm Sakshi, Batra, and this is a special edition where our focus is on the upcoming IPOs. If IPOs is the space that you're interested in, this is surely the one that you have to keep next on your watch list, because I'm talking about luxury hotel developer Juniper Hotels that runs some properties under the Hyatt chain in India, and it's now set to launch its IPO starting February 21st up until February 23rd. It's also set the price band for this IPO, which is 342 rupees to 360 rupees per share. It's an 1800 crore rupee IPO, which is a fresh issue completely with no offer for sale component coming in and a 10% reservation coming in for the retail investors. Joining in to share more insights on the company's financials as well as the plans going forward, the IPO details. And now I'm joined by the two special gentlemen, the management of the company, Mr. Arun Kumar Saraf, the CMD of Juniper Hotels, and Varun Saraf, the CEO of Juniper Hotels, now joining in. Welcome to both of you, gentlemen, and thank you so much for speaking to us on Business Today Television. Well, first up, how does it really feel? Mr. Arun Kumar Saraf, I'll begin by you. I mean, of course, this is one of the milestones that everybody looks for in their business growth trajectory, is to get themselves listed on the exchanges. What is your own sense that finally your dream is coming true and your IPO price has been delivered now? What is your own expectation when you enter the stock market realm?
Thank you, Sakshi. Thank you for having us this morning. Actually, we are. This is a very important milestone because this is the second phase of Juniper. First phase, Juniper grew over last 20 years from a very new company to a very good scale on based on promoter funding and bank funding. Now we are going to go to the capital market, raise fresh money to go into the Juniper 2 phase, which is going to be an exponential growth phase of the company. And the whole race is actually attributed for growth going into the future over next 3 years to 5 years.
Absolutely. Well, our wishes are with you for a fabulous ride ahead as far as the stock markets are concerned. We will delve into a little more detail. Mr. Varun Saraf, if you could explain to our viewers what exactly is the objective of launching this IPO. You're raising 1800 crore rupees, and my congratulations to you, because this is an entirely fresh issue which is rarely been happening over the last 1.5 years in the way the IPOs have been launched, where maximum portions or fully it's been an offer for sale. This is a true opportunity for the retail investors at large to participate in the growth story of the company. Tell us, what's the objective with which you're launching this IPO?
Sure, thank you. So we're raising 1800 crore rupees, of which 1500 crore rupees will be initially used to par down our debt. We have a debt of about 2,200 crore rupees, so 1500 crore rupees will be used to reduce that. The balance 300 crore rupees will be available for GCP purposes, sitting with us so that we can grow. And the reason that there is no offer for sale is because we believe in the future of the hospitality industry, and we are truly poised for this growth phase that is yet to come in our market. India is ready, and we want to position the company to take advantage of that upcycle that is available for us going forward. So the money comes into the company, and we will be ready to relever and start our growth phase again.
Okay, fair enough. Mr. Arun Kumar Saraf, let me take the point that Mr. Varun Saraf has pointed on the belief in the hospitality sector's growth. I believe I want to understand on the timing of launch of this IPO. This is a time when the entire focus in the country is on boosting tourism, be it spiritual tourism or developing other places in India, with the government's focus clearly on this realm as well. What exactly do you foresee as growth opportunities for yourselves? Because this is also growing into a crowded market with many established players already present here. How would you really chart out your own territory in this space, in the growth, in the tourism space in India?
Sure, thank you. Let me first put it in context. Juniper Hotel is an owner and developer of large hotels in big cities. Our properties are predominantly almost like a million square feet plus, if you look at Bombay and Delhi. So we are in a very, very unique market sitting on top of the market. We are number one, number two in all the markets that we operate. And we have an agenda of developing an ownership of the assets, of marquee assets in these towns. And Indian growth story in terms of tourism has only just begun. Under the leadership of Prime Minister Modi, you can see that the whole country has been growing and tourism has been exceptionally benefited from his policies, and the country is on a trajectory where I think there is no limit to growth in this industry. We are still in a very, very nascent stage, and there is room for all the properties, in all segments. And in our own segment, which is the luxury and upper upscale segment, the opportunities are huge. And the growth will come mostly from large cities for us, and they're being established into a big, large metros and tier two cities, where we see that there is still a paucity of hotel supply in these towns.
Okay. Mr. Varun Saraf, taking a leaf out of what Mr. Arun Kumar Saraf has said, I want to point out to you and ask you to explain to our viewers at large. You've talked about in your DRHP that, you have a very unique model, which is hotel development and ownership, and the largest owner by the number of keys of Hyatt affiliated hotels in India as well you are. Explain to us what this really means and what is the tie-up like, and why has Hyatt really chosen to invest in you when there are exactly a lot of opportunities available out there in the market?
Sure. So our relationship with Hyatt is unique in that Hyatt is a management company, but in Juniper, Hyatt also has an equity partnership. So this is a unique relationship where the operator actually has a skin in the game. So our goals, our motives are aligned. The idea is to build efficient hotels, and that's what our expertise as Sarafs are. We build assets, and Hyatt has an expertise in managing our hotels. So in Juniper Hotels, that's the unique combination that you find. You find a solid, experienced hotel developer and a management company coming together to bring out the best and create very efficient assets and operate them at the optimum levels. So that's the partnership that we talk about.
Okay. Mr. Arun Kumar Saraf, let me just now talk about a little bit on the financial side and, ask you to help our viewers really understand where is the next lever of growth really coming in from for you going forward from here. So on the revenue part, we've seen from FY21 all the way up to FY23, there has been a substantial growth from 192 crores to 717 odd crores. However, we've seen on the profitability front, you are still to come into profits. Of course, the losses have narrowed all the way from FY21 to FY23. Help us understand which way are both these parameters headed from here. What are your internal targets? Where exactly do you see both your top line and bottom line really growing going forward from here?
Sure. First of all, let me explain to you where our new raise of equity and deleveraging of the company will actually throw up almost 225 crore rupees of surplus, which was going into debt servicing. So with that kind of additional cash flow, we will be profitable from first quarter of the 25 year, 24,
Okay.
25 financial year. And going forward, with the surplus money available to ourselves, we would have much more than what we are raising in terms of growth money. In terms of big numbers, if I may add here, our growth in the tourism industry, and especially in the sector that we are operating in, you can almost expect to have a 12 to 15% growth on different markets. And for the company, we are predicting almost a growth of about 14% year on year from the 2023 numbers into 24 and then into 25. And most of it is coming internally from our own facilities that we have. There is some that we would like to have new assets coming into the company, and
Okay.
those assets will also contribute about 50 crores.
Okay, on the new assets, could you help us understand what is the kind of plan going forward from you? Are you going to be looking at mergers, acquisitions going forward as well?
Yes, we do have certain properties which are sitting outside this platform of Juniper, which are also controlled by the Saraf family, and they will come into Juniper by way of merger over the next year or so.
Okay, fair enough. On the margins front, sir, help us understand where exactly are your margins placed as of now, and what is the trajectory going to be? What are the growth levers because of which you can have an improvement in the margins going forward?
Sure. Our EBITDA margins are probably among the best in the industry. We are operating at presently around 44% of EBITDA margin on our revenues at the hotel level, asset levels. And going forward, the EBITDA margin will improve quite considerably, and we will be touching more like 48 percentage. But most of the growth is actually coming through ARR growth in our industry, and we are still operating at subpar levels in most of the cities and compared to the international rates available. We are operating almost like at a $150 levels in India for a luxury hotel, whereas in the neighborhood countries and all, it's already crossed 300. So there is a significant catch up to be done, and I think that market is now ready to start accepting higher rates at the hotel rooms.
Okay, Mr. Varun sir, after you, could you explain to us, the segmental revenue contribution really coming to you right now, and the geographical mix as well that you have currently, and going forward, where exactly do we see this move?
Sure. So we're located in Delhi and Bombay. So those are two of our main assets contributing to about 80% of our revenue, followed by Ahmedabad and Lucknow. Again, two emerging markets. Ahmedabad is already, it has already become one of the most, Gujarat has become one of the centers for manufacturing, and it is poised for further growth. And of course, with UP and Lucknow being ready for the $1 trillion economy, as they state, so development is going to come. So between these four cities, almost 95% of our revenue is there. And in terms of our business mix, what we call the transient segment contributes to about 45 to 50% of our revenue, followed by the group segment, which gives us about 30 to 32%, and the remaining comes from our contracted segment. So we have a good mix across the segments, and I think this trend will continue. Our focus is to reduce some on the group side and increase more on the transient, as it allows us to get better rates. And I think the market will allow for that going forward.
Okay, so what is your vision going forward? How much of the segmental revenue should come, as per your own targets from transient business then going forward in the long term?
I think we should be targeting anywhere between 50 to 55%. Group should be sitting about, I would say about 30 odd percent, 32%, and the remaining should be from contracted. So
Okay.
some slight changes. I think that will just help us work on the average rates better. It's not major changes. I think post-COVID, it's already come down and it's already stabilized.
Okay, any international foray you're looking at? Are you present internationally as well? And where exactly do we see that going forward?
No, I think we will focus in India. I think the growth story is here. We have the trajectory ready for the next 5 to 10 years, maybe even longer. So our focus will remain on India. And the large cities, as we said, we focus on big box, large development. So the big cities are always there, but anything that is coming up, any emerging destination would always be on the lookout for those as well.
Would Ayodhya be on top of your radar, or Lakshadweep?
Yes, it would be. I think we have to find the right opportunity. I think Ayodhya has, it's the right, I think it's already a bit too late to go in. The market is already sort of, the euphoria is there, but of course, Ayodhya will be on the cards, and other other leisure destinations which can support large developments.
Okay. Mr. Arun Kumar sir, after you, on the shareholding pattern, could you explain to us what it is before the IPO, what it will be going forward, and where exactly do you see the promoter shareholding headed?
Sure. At present, the company used to be a private limited company, which was owned equally between Sarafs and Hyatt. So we were 50-50 partners, and we are both promoters in this company. To have Hyatt also as a promoter, significant promoter, was very, very important for us. Going forward, we are diluting about 21 to 22 percentage of the existing equity. So the promoters together will hold about 78 to 79% of the company's equity, which would be half and half held between Sarafs and Hyatt. And 22% of the new raise will be all going into the company. Both Hyatt and us, we feel that there is more opportunity here, and the IPO has been priced very, very properly, so that the company can benefit from the new raise. So we are
Okay.
looking at continuing to be equal partners going forward in the near future.
Okay. Help us understand as far as your employees are concerned. Are they getting any sort of, leverage in this IPO? Are they getting any discounts for participating, or is it only the retail category that they will be able to participate in?
They would be only able to participate in retail category. There are no
Okay.
reserve category for anyone.
Okay, fair enough. Well, on that note, all the very best to you for the upcoming IPO. And we will discuss once the IPO gets launched and listed as well. More insights from you going forward from here. Many thanks for being with us on Business Today Television. All the very best to you both.
Thank you,
Thank you very
Sakshi.
much.
Thank you
Thank
very
you.
much. Thank you.
Thank you. And with that, we wrap up this very special conversation with Juniper Hotels on the upcoming IPO plans going forward from here. And of course, we've detailed for you what the details are as far as the price band is concerned, but more insights to follow even going forward when we delve deeper into the IPO fine print. Many thanks for being with us on to this edition.